Welcome to the Finding Financial Freedom podcast with the Frugal Physician, where Dr. Disha Spath will be your companion on this exciting financial adventure. Get ready to conquer debt, build wealth, and embrace a mindful spending lifestyle that will empower you to live life on your own terms.
Life insurance is a cornerstone of financial planning, providing peace of mind for you and your loved ones. However, the underwriting process can be complex, especially for physicians who might face unique challenges due to their medical histories, hobbies, and lifestyle choices. Today, we'll uncover how these factors influence policy terms and premiums. Here to help is Dr. Stephanie Pearson, CEO of Pearson Rabbits. Dr. Pearson is an advocate, broker, and expert in physician disability and life insurance. After a personal experience with a career-ending injury, Dr. Pearson shifted her focus from practicing OB-GYN to founding Pearson Rabbits, where she leverages her medical expertise to help physicians understand and obtain the insurance coverage they need. Her unique perspective as a physician and insurance professional makes her the perfect guide to today's topic, understanding life insurance underwriting for physicians. Today, we'll explore the specifics of the underwriting process, discussing how factors such as medical histories, high-risk hobbies, and travel plans can influence policy terms and premiums. This subject is often complex and misunderstood process of life insurance, so let's get into it. Welcome, Dr. Pearson.
Hey, Dr. Spath.
How are you today?
I'm great. How about you?
Good. It's nice to have you back on. I feel like we're becoming fast friends here on the podcasting world.
I love it.
Well, tell us a little bit about how much life insurance underwriting Pearson Rabbits does, and then we'll dive into how it works.
I don't really have the particular numbers. I can tell you that we have over 6,000 clients right now, and a good majority of them will purchase both disability and life insurance. I can say that for the overwhelming majority of our clients, we're really just talking about term life. Just to kind of put that in perspective, kind of 10,000-foot look. When we talk about life insurance, there's term and permanent. And I think a lot of people are used to hearing whole life, whole life, whole life. But there are three other permanent life insurance policy types: whole, universal, indexed, and variable. While I do believe that there's a time and a place for those products, it's really not when we're young and raising families. And so we really do tend to focus just on term to kind of give some of the quick nuance differences. As its name denotes, is good for a period of time. And it really can go from anywhere from a year to 40 years now. I would say most young people are looking at 10, 20, and 30-year products. They tend to be way less expensive for what you're getting. However, they don't create a definitive death benefit. It's good for a period of time. It doesn't build cash value, but that's okay, in my opinion. Our biggest financial burden is really raising children, presumably getting them out of the house and educated. When we talk about permanent products, they do offer a definitive death benefit. If you want a policy that is going to pay out till you die, presumably before age 100, it's there. The issue is it can be 6 to 10 times more expensive. Yes, it builds cash value. Yes, you can borrow against it. Yes, there are some estate planning benefits. But in my humble opinion, very few people really need millions of dollars of definitive death benefit. Why we really focus on term. And I was one of those physicians who got somewhat taken advantage of fresh out of training. I did buy a permanent product. We have since gotten rid of it since I got hurt. But that was part of my desire to start this company and really focus on education and advocacy and not just selling products that people don't need.
I know we've talked about this in previous episodes. In the baby steps episodes, we'll talk about insurance. And while permanent life products may have a place for people that are deca millionaires that really have an estate tax problem, that's not most of us practicing physicians, especially early on in our career. All we need is, to make sure our family is going to be taken care of if we die an untimely death or a timely death. But hopefully by the time the timely death comes around, we'll have enough assets to pass on to our kids, and we don't need to have a permanent life product with a death benefit in order to do that, right? We'll have our own investments and the accounts that we're investing in ourselves with much less fees that we can pass on to them when we die at the end of our life. But in the middle time there, where we're not financially independent, we don't have a lot of assets built up, and then we still need to make sure that our family is taken care of if we die, term life is a great product for that. And it's a lot cheaper. Diving into the underwriting process, which is the topic of this podcast, can you explain to us what life insurance underwriting is and why it's particularly important for physicians to understand this process?
So, when we talk about underwriting, and I'm going to kind of compare it to disability insurance because it's something that we've talked about before. With disability insurance, companies are looking at morbidity risk, right? So, what you do as a career affects your risk. With life insurance, while they take that into account, they're really looking at mortality risk. So now they're doing your medical history, but also your family history, which doesn't take into as much of account when we're talking about disability insurance, right?
Mhm.
Genetics plays a huge role in what our mortality risk is. So now they're looking at your medical history, your prescription history, motor vehicle history, labs, and family history.
Hmm.
And they ask specific questions, to your point about hobbies. There
Mhm.
is an advocation questionnaire, and I can get into that in a little bit. There's also issues in the medical space for folks that are here on visas
Hmm.
and are considered foreign nationals, and we can get into that a little bit more too. But if we're looking kind of that high level, you're most likely going to have to give labs. You're most likely going to have to pee in a cup, and everything is wide open. Caveat to that is a lot of the carriers are trying to move away from that in-depth underwriting and offer something called accelerated underwriting, which
Mhm.
usually is fluidless, and they're looking at EMR. Usually you have to do a phone interview or fill out something online. I will tell you, we're not having great responses for physicians, and we're trying to figure it out. The
Hmm.
national overall data is that about 60-ish, maybe a little bit higher percentage of people are getting through accelerated underwriting. We're having less than a 50% success rate with physicians. And my 2 cents is that we tend to be more honest, which is not a bad thing. We tend to see the doctor more, right? Physicians come in one of two types, right? The ones who never go to the doctor and the ones who go to the doctor for everything. And I think that that's what we're seeing. Part of, again, why I wanted to start this company was to help manage realistic expectations. So if I have somebody that looks super clean, we'll talk about accelerated underwriting. If there's really anything in their medical history, I don't recommend it because I think it's a waste of time.
I think I went through you guys for my life insurance. And I remember the person coming to my house in Savannah and sitting on my front porch and drawing my labs and asking me all these questions. I was like, wow, these people really invest in a thorough workup.
It's a huge investment for these
Yeah.
companies, and at the end of the day, we want them to pay. You would think it's life insurance, you're either alive or dead. You'd be surprised at what companies try to get out of paying. We want these companies to be solvent so that when people are doing what they say they're doing, that they're actually gonna pay out. And so I get it, if we're looking at it from a big business standpoint, because these policies are cheap, right? And so you're paying a couple hundred, maybe a couple $1,000s a year for multiple millions in death benefit. They have to
Yeah.
do their due diligence.
True. I mean, it's a risk mitigation scenario for them, and they're
Right,
trying to spread out their risk over a lot of people and
right.
hopefully not go out of business. Makes sense. What are the aspects of a physician's profile that really make them less successful at this accelerated underwriting?
I think the top 3 are probably mental health issues. There are not very many of us anymore that are getting through training and early career without some sort of diagnosis and medication. And that tends to be a knockout for the accelerated
Mm.
underwriting. And sometimes we see it really hurt people. Sometimes they don't spend a whole lot of time changing occupational classes, or not occupational classes, I'm sorry, health classes. Recently, we're starting to see them get a little more stringent. So that's one. Two, as you mentioned, is avocations, right? We're kind of the work hard, play hard. A lot of us have hobbies, one that we can afford, because avocations tend to be a little bit more expensive. Two, that tend to be adrenaline junkie-ish. I
Yeah.
was one of them. I used to jump out of airplanes. That was how I used to, let go of stress. I used to.
Really?
Mhm.
Like all the time?
Not all the time because it was expensive,
Yeah.
but a couple times a year I would go.
Wow.
Um, and oh my god, it's the best thing ever. And so there are certain hobbies like scuba diving. We have a decent number of docs who have gotten private pilot license,
Yep.
rock climbing, snowboarding, right? Some of these hobbies that are either going to end up, depending on state and carrier, sometimes
Mhm.
they'll exclude a hobby, right? So I'm not going to get paid if I'm a pilot and I go down with my plane versus paying a lot more. And when they add ratings on life insurance, it's a price per thousand. And because we're talking about physicians who need millions, it adds up real quick. And so some of it is knowing the right questions to ask and asking which carriers are going to do what we want them to do. And then I would say the third thing really does come down to foreign nationals. There are companies that will make decisions based on either your country of origin or how often you go back home, how
Hmm.
long do you spend, and travel in general. I would put under the foreign national piece. We know a lot of docs who like to do mission work or just travel, right? Depending on the political, socioeconomic basis of a specific country, companies will either not cover somebody, they may cover with a lot of fine print, or they may hold. Like if somebody comes to me and there's a question on every application that says, do you have plans to travel outside of the United States in the next 12 to 24 months? Depending on where that travel is, we may have to wait until somebody gets back.
Hmm.
There are a lot of nuances with foreign travel.
Are there certain countries that are considered like safer than others? Does that play into the calculation?
The countries that are, I guess the easiest way to say it, are most like the United States tend to be fine. And then you have some areas that are real hotbeds, right? Like right now, we're not getting anybody covered in Haiti. We're not getting anybody covered from the Ukraine. We're not getting people covered from the Middle East. And so it really does depend on what's going on around the world and where the US Embassy, they'll change travel rulings. I'm sure
Mhm.
you've seen
Yeah.
that in some of your traveling. I have travel advisories as a tab on my computer
Oh,
so that
wow.
when I'm speaking with somebody who is from a different country or is planning to travel to a different country, I can pull it right up and see what the US is recommending and then cross-reference that with what the carriers do.
Hmm.
And then also there are certain states where because of legislation, they're not allowed to ask. It's kind of interesting. It's Florida and I want to say Georgia, but don't hold me to that. If you apply in those states, they're not allowed to ask you about travel plans.
What if someone decides, they get their life insurance policy early in their life and they have it, and then they decide to get into flying or
Different,
humanitarian missions? Then what happens?
nothing.
Ah.
Right? It's kind of like disability insurance, right? Once you have it, and they can't really change, and so it always goes back to getting it young, healthy, early when you don't have risky hobbies. Yeah, once you have your policy, you're good. The
Nice.
issue always becomes, do you need more later when you have those hobbies, right? So
Right.
a lot of times when we're looking at what's the right number, there are really complicated calculators out there that look at everything from the average cost of a funeral in your area to assets, 529s, all that stuff. I tend to be a keep it simple, stupid person. I tend to speak in ranges, and the sweet spot is usually somewhere in the middle. And you'll tend to hear that people should have 10 times their income or $1 million a child and then roll in debt that won't die with them, right? So
Mhm.
mortgages, small business loans, private student loans, if they won't be forgiven upon death. And so what somebody needs today is probably not what they're going to need tomorrow, right? I try to make things economical in the time. However, there are some times where people know what they plan to do in advance, and it makes sense for them to buy more upfront. It becomes a just like disability insurance, it's not a one size fits all.
Do you usually recommend people buy like a $3 million policy for 30 years, or do you recommend that they ladder policies?
It depends. I tend to look at how old are their children, how big is their mortgage, and what's the plan to pay that off. And then we structure it accordingly, right? So I talk about 10-year terms when people have older kids and they're trying to play catch up. If somebody has a small business loan, they tend to be 8 to 10 year notes, and the bank will want you to have a life insurance policy to cover that loan. I tend to talk about 20-year terms when people have younger kids and or remarkable mortgages. To me, a remarkable mortgage is above 500,000 or close to a 500,000. I talk about 30-year terms when people have really young or unborn children
Mhm.
and remarkable mortgages. The goal, in my opinion, is to maximize your coverage when you need it most but try to save money over the long run, right?
Mhm.
So I'm really trying to find a delicate balance between not being overinsured and not being underinsured.
Right. You're having to try to predict the future, which is very
Mm,
difficult, obviously.
yes, I have not been given the gift of omnipotence yet.
Although I wouldn't put
Holding
it
out.
past you.
I'm holding out.
So, what can physicians do to make the underwriting process smoother?
I mean, this is gonna sound really trite, but be as healthy as you can, right? Like, the time to pick up a smoking habit or, eating Big Macs every day. Sorry, McDonald's. Ultimately, the younger, the healthier we are, the better it's going to be. There are a couple of real caveats. One, all women should get at least their first policy in place before they get pregnant. Things like gestational diabetes and other abnormal outcomes of pregnancy will as much as double to quadruple the cost of coverage. So at least we can get something in place that's less expensive. Genetic testing seems to be kind of the way of medicine, and they can, in fact, hold genetic results against you. These are
Wow.
private commoditied policies. It's not like health insurance. And so if there's even talk about genetic testing, please don't have it in your medical records yet. Get your insurances in place, and then you can go get whatever testing that you want. But we are seeing that be an issue. And so you really want to kind of think about what's getting put in your medical records and what testing you're looking at and make appropriate plans, for lack of better phrasing. A lot of the weight loss drugs that are hot right now, insurance companies don't really know what to do with that information, and they tend to add back at least half of your weight lost if it's been within a year. That one's a little bit of a double-edged sword because I want people to get covered. Some of the companies will let us go back later, try to improve their health class. So, for instance, I have somebody right now who got a rated offer because his cholesterol was really out of bounds, and he had no idea until he got his labs for his life insurance. And we were
Yeah.
in that, like, well, do I not get it now and improve my labs and get it later? Do I get it now and then go back? And I was like, well, what happens if you die tomorrow? Right.
Right.
And so we ended up pulling back on the death benefit a little bit. And it's now been 2 years, and he started a statin. His labs are gorgeous. I literally just sent the request today to see if we could get his cost lessened because of the improvement in his health. And so there are some companies that'll let you do that.
I want to make sure our listeners understand you should not be putting off taking care of yourself to get a better life insurance rate. You
Correct.
should definitely take care of your health and your mental health. Don't put it off. Don't worry about the life insurance rates when it's about your life, right? Because that's the difference between frugal versus cheap, right? To be cheap would be to try to get the cheapest life insurance possible by putting off taking care of your health, which is not good for you, not good for your family. The frugal way would be to get the life insurance, pay a little bit more if that's what's necessary for the little amount of time, and then try to improve your health and go back for another quote. And you should never put off taking care of yourself. And when we're talking about trying to make a smoother underwriting process, please don't take away that you should be not taking care of yourself.
Exactly. I tell people all the time, I'm a physician first, right? So I'm never going to say to somebody, don't do something. Again, the one caveat is genetic testing. Get your stuff in place before you get tested. Outside of genetic testing, there's no reason not to take care of yourself. And if it costs a little bit more in the beginning, okay, we can always go back and either try to improve it or replace it. Term life is as good as you are paying for it. So it's not written in stone that this is the policy that you're going to have for the next 10, 20, 30 years.
And let's dive into the genetic testing a little bit. I want to clarify, you're not talking about like Ancestry or 23andMe or anything like
Not
that.
yet. Not
Okay.
yet. Companies that I am aware of don't have access to that information yet, although I'm not going to be surprised if some of that data becomes public. There was a data breach not too long ago on one of them. I'm talking about you're seeing a doc and you have a family history of ovarian and breast cancer and they want to BRCA test you, or they want to do cardiac genetic screening to see if you're at increased risk of having an MI, or family polyposis, like all the colon cancer
Mhm.
testing. I'm talking about those types of genetic tests where it really will change both your health surveillance and your mortality risk.
Okay, yeah, that makes total sense. And putting that off for a month or so is not going to change your
Change the
overall
outcome.
health perspective. So I can see that. And maybe, would you advise people like not to take up scuba diving right now, or maybe don't buy that private plane?
Like I said, now is not the time. I also say to people, look, if you're a vacationer, right? Like if you go scuba diving once a year, you're
Hmm.
not a scuba diver. You
Okay.
scuba dive on vacation. But we have people who every chance they get, they're going somewhere and scubaing and they're going really deep. One of the things with scuba diving is what's your level of licensing? How deep do you go? How often do you go? Do you go by yourself? Do you go with someone else? Do you do underground caves? I mean, like the questions are pretty intense,
Wow.
right? For rock climbing, usually if you're an indoor rock climber, they don't really care.
Okay.
But if you're going to the mountains,
Hmm.
once a month and you're free climbing, they care. And it's how often, where, are you alone? Do you use belay equipment? The questions are really in depth so that they can really do their risk mitigation of what are you doing?
What about flying? Are they asking, like, are you flying a jet with a parachute versus a Cessna? Like, do they care about what kind of plane you're flying?
Yeah, same thing. They go into what's your licensing? How many hours do you have under your belt? How often are you flying? What type of plane? What kind of engine? I think there are a couple more questions, but I think you get the gist. They do go pretty deep. We actually just had somebody not too long ago who raced cars. Well, that doesn't sound really smart.
Is it street racing?
No, it was like real deal stuff. And
Oh my
so
god.
avocation stuff is a real thing for physicians.
Yeah. So we talked about the specialties affecting disability insurance rates last time you were here. Is it the same for life insurance? Are there any high risk specialties?
Not really for life insurance. For physicians, we're all pretty much lumped together, that they really are looking more at our mortality risk related to our health and labs and genetics.
So, Stephanie, what goes into the pricing of a life insurance policy as an overall? I know you can't give out numbers.
So a lot of factors go into pricing. So are you a boy or a girl? What state do you live in? How old are you? And some of the companies go on your nearest age, some go to actual age. So that's always a kicker for people when they go by nearest age and somebody's, 29 and I get to say, "Oh no, you're 30." Um, you know, medical history, family history, labs, and we tend to look at a myriad of classes. There are 4 major ones. Again, they don't really share nomenclature, so some of this may be different, but best, preferred plus, or preferred, standard, and then there are 26 potential tables. Some companies use letters, some use numbers. I've actually never seen it past about level 10. Most people in medicine are probably going to be looking at wanting to purchase somewhere between about 1 and 5 million in
Hmm.
coverage.
Hmm.
And I've seen it as low as a couple $100 a year, and I've seen it as high as a few $1,000s a year. It really depends on so many factors. Don't smoke, please. That's probably one of my biggest. And if you happen to be at a bachelor party or a bachelorette party and you're having a cigar, that's not the time to get your labs drawn, right? You might wanna wait for a little while because that will incredibly increase the cost.
How interesting. So, if you have, what are they testing for? Is it just nicotine?
They look for nicotine, and then there's a sub-unit that
Hmm.
they look for that is escaping my brain right now. They're looking for breakdown products as well.
What about marijuana?
Great question. Interestingly, as a lot of states are decriminalizing marijuana, it's
Hmm.
becoming an issue with all insurance carriers. Some of them still won't cover you. Some of them will say it's okay if you smoke up to X times a month or
Wow.
a week. Medical marijuana, the same way. There are rules on how much you can smoke a month. We haven't really seen it change pricing, but they have started asking about edibles. People are now ingesting marijuana in different ways. That is really state and carrier dependent.
That's interesting because, yeah, marijuana is fat soluble and it stays in your testing for a long time.
Mhm.
And primary care, we see that all the time. And we just see it all the time in
Yeah.
almost everyone.
It's okay if you drink a couple drinks a week, but not more than that. And they are also looking for breakdowns in alcohol. It's liver enzymes kind of plus. And so there have been times where we'll have normal liver enzymes, but this one test will be off, and it's usually a marker for excessive alcohol use, and that'll come into play. So, kind of when we're looking at all of our vices, you want to be careful. We're also seeing what's really interesting. I've been fighting this one for about 2 years now. Some of our serious runners are actually having bumps in their proBNP
Huh.
levels, and
Interesting.
they're getting dinged, and I've found a couple of white papers that talk about kind of change in that in runners, but I've now started to tell people for a couple of days before your labs, couple even a month, like, no protein shakes, like, no supplements because we don't know how they affect things. It's also kind of trying to pay attention to what are the things that we are putting in our bodies that we think are helping us that
Hmm.
for whatever reason are affecting some of our labs.
My goodness, that's a lot to think about if you're really trying to, streamline your process. Well, Stephanie, this has been a really enlightening conversation about life insurance underwriting. I know this is not a topic that a lot of people think about, but these are the facts that you should know if you're trying to get a life insurance policy, and that can be super helpful. Are there any last tidbits of wisdom that you want to leave with us, Stephanie, about life insurance and underwriting?
Yeah, I mean, I think one of the biggest things is you really want to understand what you're getting, as with everything. There are really cheap life insurance policies out there. They may not be the best thing to buy, right? We want to look at really good financially solvent companies that have good client services, that pay their claims, that'll give you options moving forward. And it just goes back to your whole idea of the difference between being frugal and being cheap.
Hmm.
And I think it's really important that when you're purchasing life insurance that you're really looking at the top rated carriers.
And what are the top rated carriers, if you don't mind sharing?
Oh God, life insurance is there are hundreds of life insurance carriers. And in our software system, you have to be A or A plus rated in order to even pop up in our searches. And I would say at any given time, there's probably 24.
Wow.
When we're trying to whittle down that, we are generally looking at about 8 to 10 companies that, as I mentioned before, have good financial standings, have good client services, pay their claims. And it really shouldn't come as a surprise that sometimes those change based on their claims history, based on mergers and acquisitions, based on the changing of the guard, right? It's just like in the hospital when we see that the C-suite changes over and they try to reinvent the wheel, it doesn't always work out. The
Right.
same thing happens in the insurance industry.
And that's why it's so important to have a good broker at your side to guide you. So, Stephanie, can you please tell us where they can find you if they're looking for life insurance?
Yes. So Pearson Rabbits is our website, and you can find everything you want to know there. We even have LI 101 kind of cheat sheet there. You can find me on every social platform known to man, Stephanie Pearson. There's also Pearson Rabbits. And then feel free to call the office 610-658-3251.
All right. Well, thank you, Stephanie, for coming and sharing your wisdom with us today again. And we really, really appreciate all the insights you have to bring to us and our audience about the insurance process. Thank you.
Thank you for having me, and anytime.
The content shared on this podcast should not be taken as individualized financial advice. We are here to share our knowledge and experiences, but it is crucial to consult with professionals such as accountants, financial advisors, or attorneys who can provide personalized guidance based on your specific needs.